Welcome to Dave's Daily Crypto Take. Today is Wednesday, July 21st, 2021. Let's take a look at today's charts. At number one, we got BTC at $31,676, up 7.05%. At number two, Ethereum, $1,926.17, up 9.71%. Tether at number three, $1. Binance Coin number four, $287.83, up 9.46%. Cardano at number five, $1.17, up 12.06%. USD Coin number six, $1. XRP number seven, 56 cents, up 6.29%. Dogecoin at number eight, 19 cents, up 17.66%. Polkadot at number nine, $12.28, up 13.69%. And last but not least, 10, Binance USD, $1. Let's take a look at the Crypto Fear and Greed Index. Extreme fear can be a sign that investors are too worried. That could be a buying opportunity. When investors are getting too greedy, that means the market is due for a correction. And at the time of writing, number 10, extreme fear. Yesterday was extreme fear at 19. Last week was extreme fear at 21. And last month was 23 extreme fear. So extreme fear all across the board. Today, we got 6 articles. We're going to take a look at the table of contents. Article number one is Bitcoin falls below $30,000 over Delta variant fears. Article two, Ether falls toward 1.7K as Bitcoin's price drop weighs on broader market. Article number three, Bitcoin crashing below 30K, not enough to deter Cathie Wood. ARK adds another 31 million in Coinbase, 3.4 million in GBTC. Article four, is Mother and Sons alleged $12 million scam claim to use supercomputers for crypto investment. Article 5, JP Morgan's wealth management CEO affirms most clients view Bitcoin as an asset class. And today's main topic is Tom Brady's NFT platform partners with DraftKings and Lionsgate to offer sports and entertainment-themed digital collectibles. All right, so before we get into the articles, I just want to take the time to say thank you so much to all my supporters. I've been getting new subscribers and also I've been getting new comments and also DMs. So thank you so much for all your support. Some of you have been asking for more NFT and more Ether generated and related articles. So I'm going to try and do a bit more updates on that. But again, remember this channel is going to be all unbiased. So there are going to be some articles that are for cryptocurrency and some that are against cryptocurrency. So I hope that you can make an informed decision if you'd like to start investing or if you just want to play it on the sideline. So again, thank you so much for all your support and also your comments. Please catch me on Spotify, Apple, or Google Podcasts. And if you're on the YouTube space, Dave's Daily Crypto Take. All right, so let's get into it. Article number one, Bitcoin falls below $30,000 over Delta variant fears. So Bitcoin falls 6% to $30,000 for the first time in more than a month as a Delta variant of COVID-19 spreads, threatening to sweep away the rest of the crypto market. CNBC reports that $89 billion were wiped off the entire cryptocurrency market in one day. Bitcoin falls affecting crypto market. As fears over a sluggish recovery and the Delta variant grow, other crypto assets also reported prominent falls. Ether, which is waging the cryptocurrency war with Bitcoin, plunged about 7% to $1,750, while Litecoin fell 11%, down 9.5%. As reported by CNN, Bitcoin falls after Wall Street was hit hard by Monday by anxiety over the recent spread of COVID-19 and the threat it poses to the economic recovery. The Dow Jones Industrial Average divided by 2.1% or about 725 points. The S&P 500 finished Monday with a 1.6% slip, while the Nasdaq dipped by 1.1%. Edward Moya, senior market analyst for the Americas at Oanda, wrote in a note, Bitcoin is the ultimate risky asset right now, and it could see intense selling pressure if Wall Street enters into panic selling mode. Investing in cryptocurrencies is based on trust and liquidity. And since there is a little less, the environment simply presents more challenges in the short term, said Keith Lerner, market strategist at Trust Advisory Services on Bloomberg. Cryptocurrencies up against it. Analysts see the $30,000 level as critical for Bitcoin, especially when the price held in January amid the regulatory repression in China and the UK. The loss of this benchmark could cause many investors to throw in the towel with Bitcoin. The next floor for Bitcoin would be at $20,000, the point where the spectacular bull rally began, taking prices to the $65,000 mark. Still, the Bitcoin plunge could drag along the entire crypto market, especially Ether, which has also lost the $2,000 reference. Strategist VJ Ayar asserts that Bitcoin would need to form another bottom before resuming the uptrend. He predicts that the cryptocurrency will fluctuate in the wide range of $20,000 to $40,000 for the remainder of 2021. With this outlook, Bitcoin faces a giant challenge now that its main bullish narratives has been exhausted. Regulatory crackdowns keep coming from all fronts, with China clamping on the industry and reducing crypto mining power by 75.65% between September 2019 and April 2021. The UK banned Chinese cryptocurrency platform Binance in June, one of the world's largest in terms of volume. In the US, the Secretary of the Treasury, Janet Yellen, pressured the country's financial regulators to improve and approve new control rules over what is known as stablecoins or digital currencies with a stable quotation. So there you guys have it. Bitcoin falls below $30,000 over Delta variant fears. It has fallen 6%. So what do you think? Comment down below. And if you think it's going to keep on going down to the $20,000 mark, or if you think it's going to rebound and go up back to the $40,000 mark within this month. Comment down below and let me know what you think. Article number 2. Ether falls toward 1.7K as Bitcoin's price drop weighs on the broader market. So Ether and another alternative cryptocurrencies, popularly known as altcoins, are taking a hit alongside Bitcoin as the Door macro mood overshadows bullish idiosyncratic narratives. The native token of Ethereum's blockchain is trading near $1,758 at press time, down 6% on a 24-hour basis. The cryptocurrency touched a 3-week low of $1,721 early today, having peaked above $4,000 in May, according to CoinDesk 20 data. Other prominent altcoins like XRP, Cardano, Uniswap, Chainlink, and Stellar are nursing declines around 10%. Bitcoin, the crypto market leader, is down 5% at $29,700. We're seeing risk-off moves in equity, FX, and commodities, said Edmund G., head of trading at B2C2. Crypto isn't immune from traditional market sentiment and is also caught up in the legs lower. So far, we're seeing very little movement while heading into the Ethereum Improvement Proposals 1559 upgrade proposed for August 4th. Global equity markets faced selling pressure on Monday, while the dollar rose on concerns a rebound in coronavirus cases would derail the global economy. As a result, Bitcoin and crypto, being at the far end of the risk curve, are suffering losses. According to some analysts, Ethereum's impending upgrade aims to burn part of the transaction fees and make Ether less inflationary. The Ether supply burn would be significant even with the growth of the Layer 2 scaling solutions, Noel Acheson, head of markets insights at CoinDesk's sister company Genesis Trading, said. Whatever amount ends up being burned, it will be more than what's currently being burned, so the upgrade does reduce the supply growth. Acheson said that while the upgrade wouldn't directly reduce Ether transaction fees, a sour spot for DeFi protocols and traders, it will make them more transparent and manageable. However, Delta Exchange CEO Pankaj Balani said markets priced in the bullish EIP narrative earlier this year. Ether nearly doubled to $4,000 in the 4 weeks to mid-May, even as Bitcoin traded between $50,000 and $60,000. Ether's decoupling was mainly powered by the optimism surrounding the EIP upgrade. Crypto markets are now in a slow grind lower and vulnerable to negative macro news. Balani said in a WhatsApp call, Ether and other altcoins will see a bloodbath if Bitcoin slides toward $20,000. The probability of Bitcoin falling that low and nuking the broader market has increased, with the cryptocurrency looking to establish a foothold under $30,000. When a price dumps and stays flatlined at the lows, forming a ledge, that says the market is doomed. According to trader and analyst Alex Kruger, you can see that in most charts in the past 24 hours. According to Patrick Huser, head of trading at Crypto Finance, $29,000 and $1,700 are crucial support for Bitcoin and Ether, respectively. How low can it go? Probably down to 20K, he said. If you look at the liquidity pool structure, there was not much trading on the way up, except a bit around $23,000. Ether could run into stronger selling pressure as blockchain data shows an increased flow of coins onto exchanges. We are seeing lending platforms like BlockFi sending large amounts of ETH to Coinbase, possibly to liquidate. Alex Vanesvik, CEO of blockchain data company Nansen, said, "The only positive news for crypto bulls is that the market is seeing low volumes while grinding lower. It potentially signals that sellers are exhausted and that the market is waiting for some positive news." Ether, further, equity markets are showing signs of stability at press time. The European markets are trading higher, and the futures tied to the S&P 500 are pointing to a positive open with a 0.60% gain. It could be a bounce time for crypto as equity market panic looks to be over. Kruger said, "It makes sense to move stop losses on Bitcoin shorts higher to $31,000. So there you guys have it. What do you guys think about Ether falls toward 1.7K as Bitcoin's price drop weighs on broader market? Comment down below if you think that the Ethereum's impending EIP upgrade earlier this year will have an impact on the price of Ether and the crypto world. Okay, let's keep on going. Article number 3. Bitcoin crashing below 30K, not enough to deter Cathie Wood. ARK adds another $31 million in Coinbase and $3.4 million in GBTC. So Cathie Wood-led ARK Investment Management is ramping up cryptocurrency play even as the Bitcoin price plummeted below $30,000, wiping out nearly all of its 2021 gains. The popular investment management firm on Tuesday snapped up 138,804 shares, estimated to be worth about $31.22 million in Coinbase Global Inc. Shares of the cryptocurrency exchange closed at 1.97% higher at $224.96 on Tuesday and were down 0.2% in after-hours trading. The New York-based investment firm bought the shares via the ARK FinTech Innovation ETF and the ARK Innovation ETF on Tuesday, but also holds a stake in Coinbase via the ARK Next Generation Internet ETF. Nick Chahine, Benziga's head options trader, sifts through the entire market every single day to give you his best trades. Together, the three ETFs held 5.67 million shares worth around $1.25 billion in Coinbase ahead of Wednesday's trades. ARK Invest, which counts Tesla Inc. as its top holding, is on Wednesday clearing a discussion on Bitcoin adoption with Elon Musk and Square Inc. CEO Jack Dorsey. The New York-based ARK Invest also snapped up 140,157 shares, estimated to be worth about $3.36 million in Grayscale Bitcoin Trust, the largest Bitcoin fund on the dip. GBTC shares closed 4.87% lower at $24.02 on Tuesday and have fallen about 31.5% so far this year. ARK deployed ARKW to buy the GBTC shares. No other ARK ETF holds the GBTC shares. The investment firm held about 8.84 million shares worth about $223.35 million in Grayscale Bitcoin Trust ahead of Wednesday's trades. Some of the other key ARK trades on Tuesday included selling some shares for Pure Storage and Open Door Technologies Inc., and buys include UiPath Inc. So these option trades make me on money under any market condition. So what do you guys think about this? Bitcoin crashing below 30K, not enough to deter Cathie Wood. ARK adds another $31 million in Coinbase, $3.4 million in GBTC. So you can see Cathie Wood is still buying dips like hardcore. Comment down below if you think that this is a wise choice or if you think that Cathie Wood is going to get burnt in the end. All right. I just want to take the time to take a break and say thank you so much for listening this far into the podcast and also YouTube video. Again, if you're on the podcast realm, you can catch me on Apple, Google, or Spotify. It does help me if you do put in a rating or a review on the podcast, because the more better ratings, the more reviews, then the more exposure the channel can get to new and upcoming listeners. So again, I'd appreciate it if you take time, just take 10 seconds out of your day to say something nice and give me a rating. A positive rating would help the channel as well. If you're on the YouTube space, like, share, and subscribe as always, because it will help the algorithm. And of course, I will give you some crypto happiness in the future if you can help me out. So again, thank you so much. Let's keep on going. Article number 4. Mother and son's alleged $12 million scam claim to use supercomputers for crypto investment. If it sounds too good to be true, it usually is. So, um, WTF, in what sounds like the plot from a poorly conceived comedy, an 86-year-old mother and her 50-year-old son have been accused of being part of a Ponzi scheme that promised to use supercomputers and AI to invest in securities trading and cryptocurrency. According to the Securities and Exchange Commission's complaint, Las Vegas-based Joy Cover and her son Brent raised $12 million from at least 277 retail investors since May 2018 for a company with a suspiciously generic name of Profit Commonwealth Services and Profit Connect Wealth Services. The pair allegedly encouraged investors to use money from their retirement funds, home equity, and educational funds for their families. Victims were lured by the promise of fixed returns of 20 to 30% per year with monthly compounding interest. Those attractive returns were supposedly achieved through investment in traditional securities and cryptocurrency based on the recommendations of an artificial intelligence computer or supercomputer. The Profit Connect website said it operated 2 of these machines, which it called Orwell and Tesla. Failing to use the names HAL 9000 and Deep Thought is disappointing. The complaint alleges that none of the money raised by Profit Connect was invested. Instead, it funded the Cover's lavish lifestyle, including buying homes, cars, and paying off credit card bills. $3 million of it went on commission to promoters who bought in investors, and some money was used in a Ponzi-like fashion to pay back investors that withdrew money from the scheme. Investigators say Joy Kovar transferred some $1.2 million to her own personal accounts and spent another $1.7 million on items for herself. Investors should be wary of individuals and firms who guarantee double-digit returns with no risk or loss, and said Michelle Wayne Lane, director of the SEC's Los Angeles regional office. MarketWatch reports that Brent Kovar and one of his brothers had previously faced civil action from the SEC in 2009 in relation to Skyway Global LLC. The company raised millions from investors by telling them it had built an anti-terrorism technology that would allow the government to monitor or take control of any airplane. Joy Kovar had served as a company secretary but wasn't charged in that case. So, comment down below and let me know what you think about this mother and son's alleged $12 million scam claimed to use supercomputers for crypto investment. Crazy that all of these Ponzi schemes and Ponzi scams are still popping up, and let it be alone a mother and son, an old mom and an old son going in tandem to make a scam. Wow, crazy news. Okay, let's keep on going. Article number 5. JP Morgan's wealth management CEO affirms most clients view Bitcoin as an asset class. So JP Morgan's head of wealth management, Mary Callahan Erdos, has said clients are increasingly viewing Bitcoin as an asset class to invest in. Speaking to Bloomberg, Erdos noted that the banking giant's goal is to guide clients to put their money where they need it while maintaining that venturing into cryptocurrency is a personal choice. Quote, a lot of our clients say that an asset class and I want to invest, and our job is to help them put their money where they want to invest, Erdos said. She added that the bank does not have Bitcoin as an asset class, but the store of value status will be tested over time. Erdos implied that the current Bitcoin volatility is among JP Morgan's reservations. Time will tell whether it has a store of value, but the volatility you see in it today just has to play itself out, she added. Despite some climate remains upbeat about Bitcoin's future, the asset price has plunged to new lows in recent months. Amid the cryptocurrency boom in April, JP Morgan announced it planned to allow wealthy clients to invest in Bitcoin. The bank followed in the footsteps of another major lender, Morgan Stanley. Bitcoin price breaks major support level. By press time, Bitcoin was trading below the $30,000 mark at $29,534. The slump in Bitcoin price is an extension of recent negative news facing the crypto, including regulatory scrutiny, especially from China. Part of China's Bitcoin crackdown has seen the country outlaw most mining activities, with operators moving overseas. Some Bitcoin investors had considered the $30,000 spot as a significant support level, and breaching the level will lead to more losses. If the number one ranked cryptocurrency experiences further significant declines, it could rattle the entire cryptocurrency market further. Furthermore, cryptocurrency critics have questioned some of the factors that guided Bitcoin to a new all-time of $64,800 back in April. Proponents argue that Bitcoin could act as a hedge against inflation due to its limited supply, with institutional investors pumping more money into the cryptocurrency. So, JP Morgan's wealth management CEO affirms most clients view Bitcoin as an asset class. Comment down below if you agree that Bitcoin is an asset class, or if you disagree that Bitcoin is just, a speculative asset that no one should hold in the future. So please let me know and comment down below. Okay, let's get on to our main topic today. It is Tom Brady's NFT platform partners with DraftKings and Lionsgate to offer sports and entertainment themed digital collectibles. So, Autograph, the NFT platform co-founded by NFL quarterback Tom Brady, announced Tuesday that it is partnering with fantasy sports website DraftKings and entertainment firm Lionsgate to offer sports and entertainment themed digital collectibles. The platform will officially launch its NFTs this summer. Sports-related content will be sold exclusively on DraftKings Marketplace, which will be available to users with existing DraftKings accounts. Once launched, millions will be able to seamlessly buy, sell, and trade digital collectibles. Entertainment-related content, meanwhile, will be available in Lionsgate, Autograph's entertainment vertical. The first wave of content will focus on franchises including The Hunger Games, Rambo 4 and 5, Dirty Dancing, Blair Witch, Mad Men, John Wick, the Divergent series, The Expendables, and the Twilight Saga. Los Angeles-based Autograph is also launching exclusive deals with Tiger Woods, Wayne Gretzky, Derek Jeter, Naomi Osaka, and Tony Hawk, who will be all joining the company's advisory board. NFTs are digital representations of any form of artwork tied to a blockchain, typically on Ethereum. Each NFT has a signature that can be verified in the public ledger and cannot be duplicated or edited. When people buy NFTs, they gain the rights to the unique token on the blockchain, not the artworks themselves. But the fact that the information on a blockchain is next to impossible to alter makes NFTs appealing. We are honored to partner with these powerful icons and marquee businesses, DraftKings and Lionsgate, said Richard Rosenblatt, co-founder and co-chairman of Autograph. As the nascent NFT market continues to develop, we are fortunate to enlist these leading partners with additional luminaries to be announced in the near future. Apart from Brady, other celebrities such as Lindsay Lohan and Katy Perry have launched their own tokens, as well as prominent figures including Twitter's Jack Dorsey. NFTs have soared in popularity this year. Sales volume of tokens reached $2.5 billion in the first half of 2021, according to analytics firm DAP Radar. So there you guys have it, Tom Brady's NFT platform partners with DraftKings and Lionsgate to offer sports and entertainment themed digital collectibles. Comment down below if you're either Tom Brady fan, if you're an NFT fan, or if you think that Tom Brady and NFT are a good combination, because of course, Tom Brady is a Super Bowl champion. NFTs are just coming into this realm this year and it is booming. So comment down below if you think this is a dud or if you think this is going to grow and grow, especially for DraftKings and Lionsgate. Okay, let's take a look at the prices one more time before you wrap it up. Number one, BTC, $31,699. Ethereum, $1,931. Tether, $1. Binance Coin, $288.70. Cardano, $1.17. USD Coin, $1. XRP, 56 cents. Dogecoin, 19 cents. Polkadot, $12.29. And last but not least, Binance USD, $1. All right, so there you guys have it. Thank you so much for making it this far into the podcast and YouTube video. Again, I just like to say thank you so much to everyone that's been tuning in to Dave's Daily Crypto Take. I hope that you learned a lot from today's take, especially about Tom Brady and NFTs. If you'd like to learn more about it, please comment down below and let me know if you want to see any other updates, especially in the NFT, Ethereum, or Bitcoin space. And of course, if you think that the digital currencies are going to be the way forward in the future. If you're listening on the podcast, catch me on Apple, Spotify, or Google Podcast. You can get me on any device, whether it's iOS or on Android. And if you're on wearable or if you're on the home devices, you can also catch me there too at Dave's Daily Crypto Take. So there you guys have it. I hope you guys have a lovely day. Have a good crypto day, and I'll see you in the next one. Peace.